With money printing at an all-time high and increasing inflation continuing to appear in our everyday lives, the arrival of Bitcoin has created a paradigm shift in the way we look at the financial markets and money as a whole, from the way we store and save it to the way we go about spending it. On this episode of Crypto Talk Tuesday, we're going to discuss why owning Bitcoin is important when it comes to combating inflation and preserving our wealth. Let's get scholared. Welcome to another episode of Crypto Talk Tuesday. I am Mario Johnson, president of Crypto Scholars LLC. And tonight, as I said in the intro, I want to focus on why owning Bitcoin is such an important thing to have in your portfolio. If you guys aren't familiar with necessarily what inflation is, or the devaluation of the dollar, or preserving your purchasing power, or things around that particular area, those are some of the things we're going to cover tonight. And I definitely I felt like that was an important topic because, as you guys know, on this channel, on this particular podcast, what I like to do is not focus so much on the price of the market, the price of certain coins, but I kind of want to focus on providing information, educating, so that you guys can make the most informed decision when you're choosing what to invest in and why you're investing in it. So, I know a lot of places, they focus on trying to get you hyped, trying to play on your emotions, oh man, the market's going up, or, oh my God, sell everything, is crashing. I don't like to do that. I like to focus on the why. I like to focus on if the market's moving up, why is it moving up? What are the fundamentals that are, attributing to this boost in the rise in the value of the market? Or on the inverse, if the market's moving down, what are the things, what's actually happening that is causing, the decline in the value? So, you guys may have already figured out, I don't deal necessarily in price targets. I don't deal necessarily in, dollar values per se. I just like to give the information as to answering the question, why? Why is it doing what it's doing? Why is this certain thing happening, so on and so forth? So tonight, we're going to focus on why it's important to own Bitcoin. Now, as always, before we get started, I got to get the legal stuff out of the way. Let me bring this over here real quick. I didn't realize my phone was sitting out in the open. All right, so let's get this legal disclaimer stuff out of the way so we can go ahead and get down into it. All right, the information contained herein is for informational and or educational purposes only. Nothing shall be construed to be financial, legal, or tax advice. The content of this video is solely the opinion of myself, the speaker, who is not a licensed financial advisor or registered investment advisor. Trading cryptocurrencies possess a considerable risk of loss. Myself nor Crypto Scholars LLC will ever offer any guarantee of any particular outcome. All right, guys, so let's talk about this. Again, I wanted to, like I said, kind of dive into, I guess, like I said, why it's important to have a what you call it, allocation of your portfolio to Bitcoin, because of the fact that, one, it's a hard asset, it's sound money, it's deflationary. There's so many positives. There's so many reasons, which we've covered in many videos. Almost every time I talk about Bitcoin, you guys see my face light up because it's so revolutionary. But like I said, I wanted to get into actually what we talk about in regards to purchasing power, because one thing a lot of people don't understand, some of us do, and I had to learn it myself as I became a lot more familiar with how the financial markets work, is not to focus so much on the number, but to focus solely on the purchasing power of the asset that you have. So we're going to talk about the dollar as an example, and I want to look at the purchasing power of the dollar. Now, this chart here goes back to 1913. And it talks about what the value of today's dollar, or what the value of today's dollar is versus what it was during the particular time period leading up to 2020. Now, this chart shows that we've lost about 98% of the purchasing power of the dollar ever since the Federal Reserve Act came into existence. So let's talk about this for a second. Okay, in 1913, what the equivalent of $1 in 1913 was today is now $26.14. So it's probably going up even more since then because they've done a lot more money printing and a lot more debasing of the dollar, of the value of the dollar. But basically, we're going to utilize this chart. I think this chart is accurate. Yeah, I guess it's accurate as of 2020. So based on this chart, you'll see that what you could have bought for $1 in 1913 will now cost you $26 today. And as we continue to move up, I guess today you can get, or I don't even know if a cup of coffee at McDonald's is $1 nowadays, but understand that, over time, as you can see from this chart here, what that $1 was able to purchase back then is getting a lot less as we, move forward into where we are today. So, hell, there isn't too much. I remember back when I was a kid, and I'm kind of aging myself. It is what it is. You guys can see the gray hair, so we know where I am as far as age goes. But when I was a kid, man, my granddad used to give me $1 every time I saw him, and I thought my granddad was one of the richest people on the planet. Because with that dollar, hell, I can get like 4 bags of chips. I can get a good amount of candy. I can get a freeze cup, which some people here now call flips. You can get some soda. I can partake in ice cream day when I was in school. So many things that I can do with the dollar. And that was back in, the 80s. And as you can see from the chart here, shoot, the purchasing power had drastically gone down from what it used to get purchased when it was initially, when it was introduced versus to back in the 80s when I was a kid. So, it's just amazing to see. If I go into the store now, I don't expect to see anything that costs $1. A pack of gum, which used to be 25 cents, is more than $1 now. So it just goes to show, how we can tie it into inflation. I'm trying to find the simplest way to explain it without getting too complex. I don't want to make it a situation where you got to whip out a dictionary just to understand what the hell I'm talking about. So just know that having $1 million in the bank isn't as important as the purchasing power of that $1 million. If we know that the goal of, the Fed is at least 2% inflation, of that $1 million, you're losing $2,000 per year. That's on average. Now, right now, with the insane amount of money printing that's going through the roof, you're probably losing about 12 to 17% of that, which is a hell of a lot more because now we're talking about, 120,000 of that $1 million. A lot of money, man. That's a whole lot of money for doing nothing but just sitting there. And then people talk about, well, I could put that into a money market account. I could put in a CD, and those aren't what they used to be. I don't know if you guys realize this or not, but the rates aren't the same. We're looking at rates near zero. Yeah, banks. I get an email from my bank every other month telling me how they've decreased the yield on my accounts, my savings accounts, or even my checking account. And I think right now I'm at 0.01%. So I'm at 0.01% yield if I were to leave my money in the bank, which is why I tell people who I affiliate with and have conversations with, if I have more than a certain number of dollars in the bank at any given time, I'm nervous. I'm trying to figure out where can I invest this money? Where can I invest this money? Because I understand just leaving it sitting there, it's a melting iceberg. There's nothing I can do about by just leaving it sit there. So, wanted to give you guys a visual representation of how exactly what purchasing power is, because again, we focus on the number, But at the rate of inflation, if all you have are dollars, you're becoming poorer by the second, because all you have are dollars. You have nothing that's actually combating the rate of inflation. Now, I've said inflation a few times. Let's talk about exactly what inflation is. So we're going to refer over to my friends over at Investopedia, who gives a pretty accurate, detailed definition of what inflation is. And they describe it as, or they define it as, the decline of purchasing power, which we just got through talking about what purchasing power is, of a given currency over time. A quantitative estimate of the rate at which the decline in purchasing power occurs can be reflected in the increase of an average price level of a basket of selected goods. They tend to call that the CPI, the Consumer Price Index, which they adjust every 5 minutes. So they kind of move the goalposts. But anyway, and services in an economy over some period of time. The rise in the general level of prices, often expressed as a percentage, means that a unit of currency effectively buys less than it did in prior periods. So going back to here, to our visualization chart, we see that the unit of currency, i.e. the dollar, is buying a lot less today than what it could buy back in 1913, 1929, so on and so forth. So, back when a dollar could buy 10 bottles of beer, today, to get those same 10 bottles of beer is going to cost you $19 and basically almost $20. And at one point, I think it was 71, where we at, 71? Yeah. Prior to 71, where Nixon removed the gold standard, and the dollar was no longer backed by gold. Back when I think the dollar first came out, at 1 ounce of gold, you can get 1 ounce of gold for $20. The $20 bill, you can actually cash it in for a 1 ounce of gold. Now, I don't know if you guys know the price of gold today, but you definitely aren't getting an ounce of gold for $20. Matter of fact, let's take a quick look real quick and find out how much the price of gold is currently. Well, let's go to the charts. Let's see. Let's pull up gold. So looking at the chart, today, 1 ounce of gold will cost you 1,762 of those dollars. That's a huge jump from 1 ounce of gold being $20 prior to it being removed from prior to the dollar being removed from the gold standard back in 71. So things I really want you guys to pay very, very close attention to when we talk about inflation, how it's affecting us. When I've gone to the grocery store, it's amazing. Syrup, for example, we like to get pure maple syrup. And at one point, the big tub that we used to buy, a little jug thing or whatever, was around, I think it was like $7 or $8 beginning of earlier this year, leading up into this year. And today that same tub is like $15. Unbelievable. And you also got to account for shrinkflation. And what shrinkflation does, sorry, I got a hangnail, so I was kind of distracted. I got to stay focused. But what shrinkflation is basically where the product that you're buying costs the same from a dollar perspective, but the packaging is smaller. So you're actually getting a lesser amount. So as opposed to giving the impression that things have gone up in price, what they'll do to combat that mentally, from a psychological standpoint, is they'll shrink the packaging, gradually, because they have ways of making the packaging appear to be the same size, but they've actually shrunken it. So if you may start paying attention to the size, the weight never lies of the package. It may look like it's in the same container, but in all actuality, it doesn't weigh the same. What are the chip bags? Chip bags are a great example of that, where you get 80% air and 20% chips in the bags. Yeah, perfect example of shrinkflation. But again, guys, we'll get into how Bitcoin helps in fighting the inflation was what's also known as the invisible tax, is what they call inflation. So let's look at exactly how we've gotten to the point of inflation being so high. Because a lot of people like to say that it's because the supply chain was disrupted. We had the lockdown situation last year, which is true. We had a disruption in the supply chain, and because of that, there was a situation where once the demand came back, we didn't have the supply to meet that demand. But at the same time, it was a twofold situation. So we did have a supply situation, but we also had a money printing situation. Now, I don't know if you guys are aware of this or not, but um, since the lockdown took place, Federal Reserve has printed 35% of all the money ever in existence between last year and this year. So again, we're going back from 1913. 1913, Federal Reserve Act, Central Bank, money supply, where they begin to manage the money supply, to today. Between 1913 and 2019, we were at I'll go over to the actual Federal Reserve website where they show the M1 money supply. Between 1913 today, our money supply was at roughly $3 trillion. It was pretty much flatline up until we got into, the quantitative easing era, 2008 financial crisis. And, from that point on, it just kind of erupted. But as you can see here, we went from, what's that, about 4 trillion, January 2020. And actually, I think we can go March 2020. March 2020, prior to the lockdown situation, we were at $4.2 trillion. Between then and now, we have gone to $19.2 trillion. From 4 trillion to 19 trillion. Incredible. Now, one thing about it is, and some people, I've heard the argument about, if we control, access to the printers, if we control the actual money, well, why can't we just print money? Well, one thing you guys have to realize, dollars is nothing more than paper. That's all it is. And we're going to a digital version of it. So it's actually becoming just numbers on the computer screen. A country's true wealth, a country's true GDP, gross domestic product, is based upon the goods and services that it provides. It's not based upon the number of dollars that it can print. It's not based upon its fiat currency. The fiat currency is backed. You could say, in essence, it's backed by the goods and services that the country produces. So in our case, we're not really producing any goods and services. We're great at financial markets, but unfortunately, we've outsourced all of our manufacturing. For the most part, we've outsourced a huge percentage of our manufacturing, which is why we're so dependent upon things coming from China, coming from overseas. Now, that when people, I don't know if you guys hear that when they talk about the deficit, the trade deficit, basically what that is the amount of dollars that we're sending for the goods that we're importing. So we're exporting dollars, we're importing goods. It's creating a huge deficit, meaning that we don't have we're not producing our own wealth. We're not producing our own goods to sell to other countries to back up those dollars that we're producing, that we're sending out. And it's creating a huge deficit that, for the most part, I don't see how they can repay that deficit until we basically overhaul our infrastructure and start bringing our manufacturing back here, which is what helped produce our wealth in the first place, due to the Industrial Revolution. the industrial revolution, which brought in the age of manufacturing, and we were the leaders in manufacturing. So it helped with us producing and becoming as wealthy as we are. But not to harp on that too much. I really wanted to give you guys an idea, because I've heard some people say, I've read posts, people say, well, we control the money printers. We can just print more money. There's a huge consequence to printing more money. The people who are applauding stimulus, the people who, aren't wanting to go back to work because they're living off of unemployment now. Well, there's a major consequence to that. And the major consequence to that is that when we don't have a workforce, we're not producing goods. When we don't have a workforce, we're not producing services, meaning we're just printing dollars. Hence the huge run up from 4.2 trillion to 19 trillion and counting, because we have a new stimulus package that's being proposed to come out, and it's just going to continue to grow. And that hole is going to get deeper and deeper and deeper. And somebody's going to pay that cost. You're going to see a rise in taxes. We're already seeing a rise in prices. Something's going to happen. And the only tools that can be used is raising rates. Well, if they raise rates, they raise interest rates, it's going to crash the markets. It's going to crash the equities market. It's going to crash, the stock market. It's going to crash everything, because, in raising interest rates, that raises the interest on the debt that we owe. We can't pay that. We can't afford to pay that. So we become insolvent. Anyway, again, my goal wasn't not to give you guys an economics lecture. It was basically to, like I said, keep you informed on what's happening, so you're prepared. You can be as prepared as possible for it. Lynette Zhang, so over at ITM Trading, someone that I greatly admire, and I watch her videos all the time. Very, very brilliant lady. One of the quotes that she says, and I've definitely taken away from her, is, ignorance doesn't make you immune, it makes you vulnerable. So not knowing what's coming doesn't make you immune to what's coming. It makes you more susceptible to what's coming, meaning you're going to be affected even more by it, because, we're all, just living in ignorant bliss right now, enjoying all these little checks, enjoying all this free money, not having to actually do any work for the most part for this free money that's going out, not realizing that, at some point that's going to come back, and somebody's got to pay that tab. Excuse me. And when they're ready to collect, they're going to collect, and it's going to bite us. It's going to bite us in the ass. It's going to heavily bite us in the ass. So, please continue to pay attention to that, and continue to try to understand that. What did I say? What did I say? All money ain't good money, especially when it's backed by nothing, because it becomes paper. Look up Venezuela. Look up Zimbabwe. Look up Turkey, the issue that they're currently faced with. Look up these different countries and look up their currencies, and you'll understand what I mean when I say that. Look up Japan. Japan is, in a situation, even though it's not being shown on the surface, but they're currently in a situation where, I would hate to be the head guy at the Central Bank of Japan, because I guarantee you, if he has any hair left, it's continuously falling out, because the stress level has to be, through the roof, because they have been at the tipping point for quite some time, and all they can do is print. Their markets are held up by their central banks. Their treasuries are being bought up by the central banks. It's all central bank controlled. And yeah, just always fact check me. Always look up what I say, because I want to be as correct as humanly possible with the information that I provide to you guys, and I want you guys to, get comfortable with researching and not just taking somebody's word for it. So definitely take a look at these places. Look up, Venezuela. Look up Zimbabwe. Look up Turkey. Find out what's going on with the Turkish lira. Understand that these places at one point Venezuela had the best performing stock market on the planet. And this was not too long ago. They had the best performing stock market on the planet, and today they're in hyperinflation. Today, their currency is literally worthless. Nobody will accept it. I've seen pictures of people making handbags, making purses, out of their currency, to try to sell the handbag. So not to harp on that too much, but again, that's something that I want you guys to really be aware of. Now that brings me to my point of why owning Bitcoin is so important, in my opinion. Um, Bitcoin is revolutionary because we've never seen this type of sound money before. We've never seen it. It's truly trustless. We're not. Hold on, something's biting me on my foot. Sorry. Okay, we've never been in a situation where we could. We had the ability to. That's the biggest thing. We had the ability to 100% verify everything that happens on its monetary network. Even when we were on the gold standard, it gave some level of checks and balances, but we still had to take people's word for it. We still had to trust, that this country had the amount of gold that they said they had to back their currency. Bitcoin doesn't, we don't have to trust anyone. You don't need that. Also, too, it puts the control of ownership in your hands. It gives you the power to be totally in control of what you own in regards to the number of Satoshis, the number of Bitcoin that you actually possess. You're not dependent upon a bank, to custody anything for you. Totally not necessary. Like I said, it's completely revolutionary. Now, one argument that I've heard is that, we all are aware, for the most part, that Bitcoin is hard capped at 21 million. There will only ever be 21 million Bitcoin in existence. And that's hard coded into the Bitcoin algorithm. That's in its code. Now, I've heard the argument as of late that, well, since it's code can be changed. That's true. Code can be changed, but they're leaving out, and this is why I love the fact of open source technology. That's why I love the fact that Bitcoin is open source, because they're leaving out the fact that despite the code being able to be changed, its decentralized nature requires an agreement upon everyone who operates a Bitcoin node, a full node, which you don't have to be a miner to operate a Bitcoin node. There is a difference between the miners and the node operators. So you would need a consensus of node operators to agree to a code change in order for Bitcoin's hard cap to be increased. Now, the probability of that happening is virtually non-existent. It's as close to zero as you can get without actually being zero. The reason being is, one, the monetary value involved. If I own Bitcoin, and for the most part, the high majority of people who are operating full nodes, who are operating Bitcoin nodes, they're investing in Bitcoin as well. So if I'm holding Bitcoin and I understand that, programmatically, it's hard capped at 21 million. This is priced into the market. This is what makes Bitcoin so valuable. This is what makes it so scarce. This is why, people believe in Bitcoin the way that they do, because of the fact that it cannot be manipulated. Now, as an investor, as a holder of Bitcoin, for me to agree to increase the number of Bitcoin that can be produced from 21 million to, say, 21 million one Satoshi, which is 21 million point 7 zeros and a one Satoshis. For me to agree to that would be me literally devaluing my investment in Bitcoin, changing the rules changing the monetary value and literally destroying my investment. Because as soon for me, as soon as I found out, and I'm guarantee you, as soon as anyone who has a major investment in Bitcoin finds out that there has been a code change increasing the number of Bitcoin, I'm selling. I'm out. I'm done. At that point, Bitcoin would go to zero. Bitcoin would crash. So it's kind of like, when they talk about, when they used to talk about prior to the miners now having the mass migration out of China, but when they used to talk about how, over 51% of the hash rate, which is basically the miners, resided within China's borders, how that China could, if they wanted to, orchestrate a 51% attack. They could basically be a malicious actor on the Bitcoin network. Well, for the people who have invested millions of dollars and potentially billions of dollars in the mining equipment, the question would have to be asked, why would you destroy your investment on something like that? Because at that point, it's worthless. Everything that you've invested into from a Bitcoin standpoint is 100% worthless because it's going to zero. I guarantee you, as soon as there's a true hack, a true breach within the code of Bitcoin, again, it's open source, it's been verified, tried and true. Every second of every minute of every hour, every day, someone's trying to hack Bitcoin's network. And it has yet to take place. Odds of it taking place are slim to none. Again, it's as close to zero as you can possibly get without actually going to zero. So for them to sacrifice that level of investment, it doesn't make logical sense, especially for them to be coordinated, to come together, to get the agreements. Because as decentralized as Bitcoin is, you would need a huge agreements. You would need a huge consensus amongst, and I'm speaking on the miners situation, if they were to try to orchestrate an attack, you would need a huge agreements, a huge level of consensus in order for that to take place. Me, if I'm running a mining pool, if I'm running a mining operation, and I understand that I'm generating millions of dollars per day, and I have billions of dollars of capital invested in this business, there's no way on this earth that you would ever get me to agree to it. No, not going to happen. So when people ask the question of, or even make the statement saying that, well, again, Bitcoin is code. The code can be rewritten. That's true. You can go right over to Bitcoin Core. You can go right over to the website and download a copy of Bitcoin's core, the actual core code, and you can find the section in which the 21 million is hard coded, and you can change that. Many people have. We have a lot of forks of Bitcoin's core code, and people have adjusted, certain areas of the code and come up with their own coin. Monero, Bitcoin Cash. We got Litecoin. Dogecoin is a 5-time fork of Bitcoin. There's so many projects that are forks of Bitcoin, and they've adjusted the code, and they've come out with their own version of their, they've renamed it, so on and so forth. But it's basically just a revised version of Bitcoin. And as you can see, it hasn't had the adoption that Bitcoin has. And there's a reason behind that. So I'm not gonna go too deep into that, but I just kind of wanted to, let you guys know that, when they bring up the argument of Bitcoin potentially having more than 21 million coins produced by a code change, that's people who make that statement are ill-informed, or they're purposely giving misleading information, because they either don't understand the odds of that happening. how, again, how so close to zero those odds are, or they want you to believe it so that you won't invest in it, which gives them more opportunity and makes more available for them to invest in it. Because most of the people, we have confirmed proof that most of the people who have talked bad about Bitcoin have later come out admitting that they're avid investors in Bitcoin, meaning that they've been investing in it since they were telling you not to. Some of it will hide behind the whole, for regulatory issues, I couldn't, say what I really wanted to say. But in reality, it was just, continue to spread FUD so that they could keep the price down so that they can obtain as much as they humanly possibly could before they no longer could control the narrative. So please understand that this is what happens. So another question that comes up in regards to, a negative about Bitcoin is, well, what happens after the last coin is mined? What happens after all 21 million have it issued? Well, for one thing, let's find out when the last coin will be mined. Let's find out when that 21st million Bitcoin will actually be issued. And for that, we use Clark Moody's Bitcoin dashboard, which is a really awesome dashboard because they keep a lot of metrics, which is really awesome. So going straight down to future supply, you'll see that the last full Bitcoin will be mined on May 1st, 2106. And the last coin will be issued December 10th, 2140. So we're looking at what's that, 119 years from now? Because we're in 2021. Yeah, so we're at 119 years from now when the last Bitcoin be issued. Now, by then, going off of the wonderful stock to flow ratio, by then, Bitcoin price will be through the roof. And after all coins are issued, the question is, well, what will be the incentive for miners to continue to mine Bitcoin? Well, the miners not only get rewarded Bitcoin for successfully mining blocks, but they also get transaction fees. So by then, there will be such a huge incentive because Bitcoin will be worth so much on a monetary scale that the transaction fees will offset the non-issuance of new coins when December 10th, 2140 actually hits. So there will still remain to be huge incentives for miners to continue mining Bitcoin because the network will continue to function. Transactions will continue to be, transacted, and, things will continue to move on. Hell, at that point, I may want to be start a mining operation, but I think we'll have miners, all over, Antarctica, in everywhere at that point, because of the fact that it would be so cost effective to mine Bitcoin. That's another thing that people don't realize is that when we talk about, people talk about how Bitcoin is so energy consumption. It consumes a lot of energy. Well, we also know that's not true. But as I pointed out in one of my previous videos, that when you're protecting, at right now, $1 trillion worth of, value, you want it to, you want to allocate enough energy to it in order to ensure that it's remaining secure. Let's think about the amount of energy that we use to secure Fort Knox. If you look at the number of soldiers that are there, because it's in the middle of a military base, you look at the number of soldiers that are there, 26,000 soldiers estimated, the amount of artillery, the amount of firepower, and that's a lot of energy being devoted to protecting our country's gold reserve, which is, I guarantee, is a hell of a lot more energy than what Bitcoin's network is using. So, and also too, we have to remember that it's going to drive innovation, because as the the mining equipment continues to become more advanced, it's going to become more cost effective, it's going to become more energy effective, and that leads that that competition leads to innovation, which leads to cheaper prices, less energy consumption, but more powerful more powerful equipment. So you have to understand the benefits that are going to come from the fact that Bitcoin is it consumes a lot of energy, because again it drives competition, which leads to innovation. Innovation, from what I've learned, innovation comes through manufacturing. And you got to manufacture these devices, and whoever can make it, whoever can make these more powerful yet cheaper, while also more energy efficient, basically more cost effective, they're going to win, and they're continuing to win. So um, when you hear people make that argument, understand that goes back to what I said when people were making the argument about the code being changed. They're either ill-informed or they're purposely giving you misleading information to further persuade you to not invest in it, which makes more available for them, which continues to keep the price at a certain level. So that's that. Now, the next thing that I wanted to talk to you guys about was, and it seems like I'm just going over the different negatives of Bitcoin, but I like to dispel these myths, because every time I hear these arguments being made, and it's like, what? Like, are you guys just really that, ignorant is a hard word, but that's the best word to use. Are you guys really just that ignorant? Are you choosing to be that ignorant? Or are you just choosing to lie? So um, I'm going to go back to why it's so important to own Bitcoin, but I just kind of wanted to, I think I kind of segued a little bit, but I just one more thing I want to talk about, and then I'll go back to the benefits of owning Bitcoin. So one other argument that people make is that Bitcoin is slow in processing transactions, which is true. That's 100% true. As you can see here, they like to compare it to Visa. So as you can see here, Visa on average processes about 3,900 transactions per second. Bitcoin, on the other hand, processes about 4 to 5 transactions per second. We also have Ethereum and Litecoin here, but that's just, I guess that's just to give, further context into the comparisons. Now, one thing that they leave out, because there's always little nuances that we have to understand when they're giving these types of comparisons, is that Bitcoin currently operates on this base layer. It's operating on the settlement layer. Settlement layers are always meant to be slow. When they're comparing it to Visa, that's not a true comparison, because Visa operates on what would be comparatively layer 2, which would be the transaction layer. Okay. Layer 1, which would be Visa settlement layer, would be Swift network. Swift would be the settlement layer. So as we all know, Swift, when you think of Swift, as like when you do an ACH transaction. When you do ACH transactions, they tell you it could take 3 to 5 business days in order for that transaction to complete. Why? Because Swift is the bank-to-bank network that banks use to settle payments, back and forth between each other. Visa uses a database. If you ever notice what Visa will do then this is for all credit cards. We're just using Visa because I have a chart here as a comparison. But when you use a credit card, what they do is they'll query your bank to find out if you have funds available, or debit card. I'll use a debit card, but they'll query your bank to find out if the funds are available, and that charge will show as pending, which again won't post for about 3 to 5 business days, give or take, depending upon, the bank situation. Why? Because Visa was on the layer 2. So it basically checked to see if you had the funds available, but it still hasn't processed the transaction until it settles, hence hitting that settlement layer. Same thing for Bitcoin. Right now, Bitcoin is operating on its base layer. It's on the settlement layer. It's not used. It's not expected to be used for day-to-day transactions, not on layer 1, not on this base layer. That's where we would have layer 2, which for Bitcoin currently it's the Lightning Network. Lightning Network is being developed as a way to help speed up transactions on Bitcoin, because Lightning settles transactions pretty quickly, as we can see here from the Lightning summary paper. They give you a really good breakdown of the purpose of Lightning Network and what it intends to what problems it intends to solve. Still got some work that's ahead, but that's what comes with a new technology. Again, Bitcoin has only been around for about 12 years. Versus Swift, which I think Swift came into existence in the 1970s, somewhere in that area. I think it was 1970s that Swift came into existence. So you have to understand that we're comparing what are we 20, 70, 40 years. No, that's 60 years of a technology being out versus 12. So yeah, you have a lot of different payment rails. You have a lot of different things that reside on top of layer 2 that are in place: Visa, MasterCard, PayPal, Cash App, all these different things that are in place that operate on layer 2 for our traditional finance world. Bitcoin is getting there. Again, we have Lightning. Now, another thing that people like to talk about, and I'll go back to the chart here, are the fees. If you look at here, the average price per transaction, when we talk about Visa versus Bitcoin, people say, well, look how much Bitcoin fees are. Again, we're talking on the settlement layer. If you go back to Lightning, which I'll go back to their paper here, and we talk about the fees, they can get down to literally one Satoshi. It's a beautiful situation. You're talking fractions of a penny in regards to fees. Again, Lightning has its issues that they're working out. Everything's gonna have its issues, but Visa 0.5 to 2%. Now think about this. And I'm still comparing transaction layer versus settlement layer here. So stay with me. Bitcoin right now on its base layer, on its settlement layer. If you were to send $1 billion in Bitcoin right now, you're going to pay, we're going to use the chart here, you're going to pay $20 in a transaction fee. It'll cost you $20 to send $1 billion. If you send that same $1 billion through Visa, you can pay up to 2%. 2% of $1 billion is $20 million. It's going to cost you $20 million to send $1 billion across Visa's network versus $20. These are the nuances that people leave out when they talk about, well, Bitcoin is so slow with transactions. Well, again, settlement layer 1 versus transaction layer 2. And then they try to talk about the fees. Well, look at how much it costs. Have you guys ever tried to send Western Union? Western Union ain't cheap, and that too is tier based when they refer to the fees. Plus, good luck trying to send money to a country that they don't agree with. You run into the anti-money laundering rules, and you got to do all this verification, and excuse me, there's just a lot involved when dealing with these things. So again, these are all nuances that people like to leave out of their arguments. They like to leave out of their debate when they discuss, the two versus the two. I look at it as apple to oranges, but if as you guys can see, when I do apples to apples, there's a clear difference there, and Bitcoin definitely comes out on top. Plus, two, I don't have to deal with any intermediaries. If I want to send a family member of mine Bitcoin anywhere in the world, doesn't matter where the hell they are, as long as they have at minimum a mobile device, which we know people who don't even have computers have mobile devices. People who don't even have bank accounts have mobile devices. So as long as they have a mobile device, I can send them that Bitcoin without having to get permission from any bank, without having to, jump through all the hoops, especially if I'm, sending cross-border transactions, have to jump through all the hoops of, verifying that I am who I am. They got to verify that they are who they are. And then you got to deal with the person on the other end who may just be having a bad day or may just want to give somebody a hard time. So they're going to make it virtually impossible for them to actually collect the money. Then you got to deal with exchange rates. You know, say I'm here in the US, but I want to send to a place that doesn't use the dollar. They use their own currency. So now we got to do an exchange. We got to find a place that's going to swap those dollars for whatever that currency is. Well, there's a fee involved with that. So here we go. you know, Going back to Bitcoin. So less of a hassle, so much cheaper in comparison because there's no percentage. We have a fixed rate. There's no percentage. So again, remember this, guys. Remember, this is very important when people are discussing the whole, basically when they're bringing up the reasons why Bitcoin is so bad, because it's not. It's not bad. It's revolutionary. It's a threat, and we all know when people are threatened, they go on the defensive, and the way that you go on the defensive is you do a smear campaign. It's kind of what happens. I say embrace it. Try to get ahead of it because it's going to happen regardless of whether you can't stop it. Bitcoin's the virus. It's the virus that you should have never unleashed. Or you should have never let get as big as it has grown, because you can't stop it now. I saw a picture of somebody who had a mining rig operation set up in the middle of a freaking forest, and they were drawing power from a creek that was flowing through, and they, very innovative. I gotta tell you, I told you, competition breeds innovation, but that's how they were getting their power, you know. Um, and it was incredible. So good luck stopping this network. Not saying that, you know, because it's definitely not used for illicit activities. Anything that's 100% transparent isn't being used for illicit activities. It's transparent. It's private. It's not anonymous. So once they know what your wallet address is, they can track A to Z to wherever the hell it's going. It doesn't matter how many different times you try to bounce it. It's fully 100% trackable. So not used for illicit activities. All right. Back on topic. So let's get back to the reasons why it's so important to own Bitcoin. So as I was saying, hard cap 21 million. We dispelled the myth on, whether or not it can be changed. You are your own bank. You get to custody it, you get to control it, you get to hold it on your hardware wallet, you get to hold it in cold storage. It can't be taken from you. The only way they can take it from you is if they can read your mind and pull those your 24-word seed phrase out of your head. That's the only way they can take it from you. So it's yours. Now, I think I talked about this. Jim Rickards was seriously against Bitcoin because he felt like the government would ban it. But he recently changed his tune. The wrong one. Sorry. I'm giving you guys my outro video. I hit the wrong button. My bad there. That's why I like to do it live. You guys get to get it organically. So that's my apologies. But he's quoted with saying, "Gold is a great way to preserve wealth, but it is hard to move around. You do need some kind of alternative, and Bitcoin fits the bill. I'm not surprised to see that happening." And he's basically addressing the conversation of gold versus Bitcoin. I personally think you should have both, because they both serve a great purpose. Nothing wrong with having both. It shouldn't be one versus the other. I think it should be an and situation. It's not Bitcoin or gold, it's Bitcoin and gold. Like Robert Kiyosaki always likes to say, gold, silver, Bitcoin. No questions asked. But going back to, the fact that you're your own bank. We talked about the fee situation. We talked about, the potential for it to be used on the transactional layer and a settlement layer. We looked at the differences there. So it's just a beautiful situation. Like, another reason why it's so important to own Bitcoin is that it protects you against that inflation. It preserves your purchasing power. If you look at, I'll pull up the chart here. If you look at the chart of Bitcoin, it's only gonna let me go back so far. So you guys gonna have to bear with me. But Where are we? I'm on the 1 hour. Let's look at the daily. All right. So if you look at the chart, what you'll see is that Bitcoin is on a continuous uptrend. It's on a continuous uptrend. As a matter of fact, let's pull up a even longer chart. Coinbase's chart. Look at that. All right, let's go on the monthly view. Let's read it out. How far back does that go? That goes back to, okay, so yeah, we can get a pretty good idea. What they always say, when in doubt, zoom out. As we continue to go, it's moving up. It's trending up. It's going up, not going down. It's going up at a tremendous rate. Right now, average is 200% a year on average. That's including the 2 years that it was actually negative. Out of the 12 years, it had 2 bad years where it was, actually it underperformed. But it had 10 years of going up. So when you talk about an inflation hedge, you talk about something that's preserving your purchasing power. I always say, when in doubt, zoom out. And when in doubt, look at the trajectory in which it's going. It's going up. It's not going down. It's going up overall. So remember that, guys. Preserving your purchasing power. All right, continuing on. Of course, we know that Bitcoin doesn't care who you are. It doesn't care where you live. It doesn't care what class of society you're currently residing or you're born into. It doesn't care what race, what nationality. It doesn't care anything about any of that. Bitcoin is I always say it's the closest thing to being it's the most fair monetary system that has ever existed, because it doesn't care. It doesn't have people at the top. They get to dictate who gets to use it. Bitcoin doesn't care. All you need is a phone. At worst, all you need is a phone, and it's open and available to everyone. That you can't beat that. You can't beat that at all. Like I said, it's not a pyramid. It's not a pyramid. There was no pre-mine. Nobody was issued, you know, a million Bitcoin before it was ever able to be mined or anything like that. Not to knock Ethereum, but for a lot of the coins that came after Bitcoin, there were pre-mines. There were a lot of coins issued before any of us had the opportunity to ever begin to invest in them. Bitcoin doesn't have that. Bitcoin doesn't care. Bitcoin is open and available to everyone, and it will always be that way, which is the best thing ever. So yeah, I think we've done enough. I don't want to. Go too long. It looks like I've held you guys for about an hour, and I appreciate you guys for hanging in there with me, even when I gave you my closing video without even trying. I gave you guys closing video. I gave it to you again just because, just to let you know we live in this thing. I do all the editing and everything, all the production as I'm speaking. So hopefully, as I always say, you guys really took a lot from this. Hopefully it was some good information that's going to help, at least help you make a more informed decision on whether or not you should begin to invest in this space. Bitcoin's top dog. Where Bitcoin goes, the market goes. No questions asked. So if you ever have any questions on which coin you should get into to start, again, this is not financial advice. This is just my opinion. But I think the coin that moves the market is the coin you definitely want to be invested in. No question. It was my first purchase, and it's will always be my number one purchase. I will always have the most money of my capital. My other coins may be worth more because of their how they perform. the rate of return, but the bulk of my capital, my earned money, will always go into Bitcoin. So I want to leave you guys with something profound too, not related, but I don't really have anything to say outside of, I guess I kind of piggyback on what I think I left you guys with in one of my other videos. Ensure that you're happy. Preserve your peace. Internal happiness is the most important thing. It's the best thing you could ever have, and you should work nonstop to ensure that it's not being disrupted, and to ensure that you're maintaining it at all times. Whenever you're having negative thoughts, always try to combat those negative thoughts with at least 5 great thoughts. Because the negative thoughts will, they'll always try to creep in, but the more you combat them with, at least 5 great thoughts, the more they'll start to fizzle themselves out. So continue to be happy, internally happy, always smile, regardless of what the situation is. Always try to find the bright light in it, because I always tell people, and I always say, and I always tell myself, everything always happens for a great reason. And it's not that it happened for a reason, it happened for a great reason. You just have to find out what that great reason is, and hold on to it and allow it to do its thing. So that's it. That's all I got for you guys. In the words of Russell Simmons, thank you for coming out. God bless you. Good night. See y'all next Tuesday.